So an ETF is probably most important or most appropriate for what type of an account?
I think that an ETF is an excellent core holding for really any type of investor. It's a very low cost way to gain access to some part of the market. So if you want, large cap, small cap, et cetera. And so I don't know that there's, one best place, but really they work well in taxable accounts because they're very tax efficient, but I wouldn't hesitate to hold them in an IRA as well, for example.
Okay, but if you did have mutual funds that had more turnover, those would definitely be more appropriate in a tax sheltered account like a 401k or an IRA, and then you would hold your ETFs in a taxable account.
That's right. I mean, so there are some ETFs that are very tax inefficient as well, though. There's a lot of kind of new age ETFs that do more dynamic trading that are really more tactical in nature. But you obviously want to have your most tax efficient assets, if you can, in your taxable account, your least tax efficient assets in your IRA and 401k.
Now, there are also some expenses that are associated with ETFs. Like when you trade any type of asset on the secondary market, there are certain expenses that are associated with making that trade. How significant is that?
So, it depends upon the platform. There are commissions when you buy and sell ETFs, but in a lot of platforms those are actually waived, so it's commission free. And there's also a small bid-ask spread as well. So normally ETFs have lower expense ratios than similar mutual funds, but that difference tends to deteriorate when you think about, again, the commissions and the bid-ask spread associated with selling the ETF over time.
Okay, and are there strategies for an individual investor or their advisor to help avoid some of those commission expenses?
Well, I mean, one thing I wouldn't look at an ETF for a portfolio where you pay commissions, where you're making ongoing contributions. So if you're buying the ETF, every week or every month, probably a mutual fund's better. It's better for a single kind of long-term holding as part of a portfolio.
Okay, so if you're investing, if you're taking money out of your account and putting it into an investment every month, ETF might not be the best choice. A mutual fund might be a better choice for that. But if you have a lump sum that you're investing for a long period of time, especially if it's in a taxable account, then an ETF can make a lot of sense.
Right, and again, there are a lot of platforms today that offer commission-free ETF trades. So if you're on one of those platforms, it really doesn't affect you as much.